$100 a week. That's all it takes to build a portfolio that could one day replace your paycheck. And no, this isn't hype or crypto. It's SCHD, a dividend ETF that's quietly crushed the market for over a decade. The longer you wait, the more it costs you. Can investing just $100 a week actually replace a full-time income? What kind of returns has SCHD really delivered? And how long would it take to reach that goal? In this video, I'll break down exactly how this strategy works, using real numbers, not guesses. You'll see how compound growth turns small weekly deposits into serious passive income, and why SCHD is the engine behind it all. And stick around, because at the end, I'll show you one upgrade that can shave years off your timeline and get you to freedom faster. This strategy is also perfect for those who started investing later in life. Most people chase the next hot stock. But SCHD investors, they build steady growing income without the stress. SCHD stands for the Schwab US Dividend Equity ETF. It's designed to track high-quality US companies with strong histories of paying and growing dividends. This ETF isn't about hype or speculation. It's about consistent cash flow from blue-chip companies like Texas Instruments, with a yield around 2.9%, Amgen yielding 3.5%, PepsiCo sitting near 4%. These aren't just one-time payouts. These companies have a track record of raising their dividends year after year, a double growth effect. Your portfolio value grows, and so does the income it generates. Now here's where SCHD gets serious. Over the past 13 years, it's returned an average of 12.83% annually, including dividends. That crushes the average American salary growth of 3 to 4% a year. It even blows past traditional savings accounts, which often offer less than 1%. And unlike a single stock, SCHD holds over 100 companies. That diversification helps smooth out volatility and gives you more stability as an investor. SCHD isn't flashy, but that's the point. It's a disciplined portfolio of reliable dividend payers, growing your wealth with both rising prices and rising payouts. This ETF does the heavy lifting. It pays you every quarter. And when you reinvest those dividends, you buy more shares, which produce even more dividends. That's the real magic here. Not speculation, but compounding. And the best part, you don't need to watch the market, pick winners, or time anything. You just contribute, consistently, automatically. SCHD is the financial engine behind the $100 per week strategy. And once you see what that actually builds over time, you'll understand why it's not just smart. It's powerful. Think $100 can't change your life? Let's run the numbers, because it absolutely can. Most people think they need thousands of dollars up front to start investing. But the real game changer? Consistency. Let's say you invest $100 every week into SCHD. That's roughly $5,200 per year. Totally doable by cutting back on 3 dinners out a month, canceling a streaming service, or skipping a few random Amazon purchases. It's not about earning more. It's about using what you already have, smarter. Now let's see how this adds up. By the end of year 1, you've invested $5,200. Your portfolio grows to about $5,600, assuming SCHD's historical annual return of 12.83%. That includes dividends being reinvested. And while the gain looks small, this is where the compounding starts. Fast forward to year 5. You've contributed $24,000 total, but your portfolio is now worth about $35,000. That's not just market growth, that's reinvested dividends doing their job. At this point, your portfolio is generating about $1,200 in annual dividend income, assuming 3.5% yield. To put that in perspective, that's 172 hours or over 1 week of labor at minimum wage. Money you earned without lifting a finger. And more importantly, this is when your mindset starts to shift. You begin to realize, wait, this works. That's a major psychological milestone. You're no longer just saving, you're earning, passively. Even better, you don't have to do anything special. No timing the market, no guessing which stock is going to pop. You're just showing up every week with your $100 and letting SCHD and compound growth do the work. It's not about how much you invest in year 1. It's about building the habit. Because once you do, your money starts working harder than you do. And the earlier you start, the more years you give compounding to run wild. This is where it gets exciting, watching your money snowball into something massive. You've seen how $100 per week adds up in the first few years. Now, let's zoom out and look at how that same weekly habit plays out over time. We already covered that by year 5. Your portfolio hits around $35,000. That portfolio generates over $1,200 per year in dividends, which is already more than a week of labor per year at minimum wage. But now the real magic begins. Compounding starts to accelerate. By year 10, your total contributions hit $52,000. But thanks to reinvested dividends and average growth, your portfolio is worth roughly $150,000. Let's skip ahead. By year 20, your contributions total $104,000, but your portfolio is likely worth around $1 million. By year 30, you've put in $156,000, but the portfolio reaches $6,700,000. All of this assumes that you reinvest the entire dividend. This is why time is your biggest asset. Not timing the market, not stock picking, just time and consistency. The first 5 years feel slow, but the next 30 do all the heavy lifting. It's exponential growth, and it's how a $100 week can turn into a $1 million machine. A $1 million portfolio sounds great, but what can it actually do for you? Let's connect the dots between portfolio size and real-life freedom. By year 5, your portfolio is worth about $35,000 and generating over $1,200 per year in dividends. That's more than a week of work, paid to you for doing nothing. It might cover your phone bill, groceries, or a few subscription services. And it's growing every quarter. By year 10, you're at around $150,000. That's almost 3 years of contributions, already doubled. And it's generating over $5,000 a year in dividends. That could pay for a used car in cash, or it could cover your rent for several months. The point is, your money has started buying back your life. By year 20, things go into overdrive. You've invested $104,000, but the portfolio has ballooned to over $1 million. And your dividends? Likely more than $35,000 per year, which is almost $3,000 per month in passive income. That covers housing, food, utilities, and gives you the power to downshift from a full-time job to part-time or stop working altogether. By year 30, your portfolio hits around $6.7 million. With SCHD's historical yield, that's over $230,000 per year in dividend income. Enough to fully retire, support your family, and still reinvest for legacy wealth. At this point, you're not just financially independent, you're completely free from needing a paycheck. This isn't just, look how big the number gets. It's about what that number unlocks. Your money starts paying for your life. Not someday, but step by step, year by year, from small bills to complete freedom. This is how average people create extraordinary lives. Not by hitting the jackpot, but by being consistent with $100 per week. Most people fail at this strategy, not because it's hard, but because they get in their own way. Let's be honest, $100 per week into SCHD is simple, but not always easy. The biggest threat isn't the stock market, it's your mindset. In the early years, the results seem slow. You might invest for 12 months and only see a few $100s in dividends. That's where most people quit. They chase shiny new stocks, try to time the market, or stop investing altogether. But the investors who win, they understand delayed gratification. They know that small beginnings lead to massive outcomes, but only if they stay the course. They don't panic when the market dips. They don't dump SCHD because it underperforms for a quarter. They zoom out. They play the long game. Here are the most common mistakes to avoid. Timing the market. Waiting for the perfect entry usually means missing the best days. Overreacting to news. SCHD holds solid dividend-paying companies. A single headline doesn't change long-term fundamentals. Stopping contributions. The whole strategy depends on consistency. The moment you stop, compounding slows down or reverses. Chasing hype. Switching from a proven ETF to meme stocks or get-rich-quick plays almost always ends badly. And here's the mindset shift. You're not just an investor. You're a builder of cash flow. Every share of SCHD is a tiny income stream, and when reinvested, each stream splits into 2, then 4, then 8. This is ownership. This is leverage. This is how wealth actually works. When you stop thinking like a consumer and start thinking like an owner, everything changes. Your emotions stop controlling your money. Your money starts controlling your future. The strategy is simple. the discipline is rare. But if you build this mindset now, the results will take care of themselves. If $100 per week can replace your income in 40 years, what if you could do it in 30 or even 20? The strategy we've covered so far already leads to financial freedom, but there's a way to accelerate everything without dramatically changing your lifestyle. Here's the upgrade. Increase your weekly contribution early on, even by a small amount. Let's say instead of $100 per week, you start with $150 per week. That's just an extra $7 a day, about the cost of a fast food meal. But over time, it creates a massive shift in your timeline. By year 30, contributing $150 per week instead of $100 builds a portfolio worth around $10 million, not $6.7 million. And dividend income? Around $350,000 per year, without ever needing to chase returns or time the market. Even just increasing to $125 per week makes a big difference. You could hit the $1 million portfolio mark 3 years sooner than you would at $100 per week. And if you're starting late, this strategy becomes even more important. Someone beginning at age 40 might not have 40 years to compound, but bumping contributions to $200 or $250 per week can help compress decades of growth into just 15 or 20 years. That's the beauty of compounding. The earlier and the more you feed it, the harder it works. And don't forget, raises, bonuses, or side income can all be routed into this plan. Every extra dollar you invest in the early years saves you weeks, months, or even years of work later. This is your fast forward button. You don't need to overhaul your life. Just give your portfolio more fuel, especially while time is still on your side. The result? A shorter path to financial freedom, fewer years spent working for money, and more time spent doing what matters. If this video got you thinking, check out the other videos on the channel. There's a lot more waiting for you. And if you're serious about building passive income, hit that subscribe button, drop a like, and let me know your thoughts in the comments below.